Earlier this week, I was out to lunch with my daughter and two of our grandsons, and one of the grandsons asked me what I had been doing in the morning. And I told him that I was trading options and I made about $800 in 5 minutes. Of course, he was interested in how I was able to do that, and he wanted to know what options were. And so I briefly explained them. My daughter raised the question as to if it was prudent to trade options, given the fact that when you're trading covered calls, somebody might buy your shares away from you if the price of the shares rose to or above the contract price agreed upon by the expiration date. And I assured her that I thought most of the time it was a very profitable way to trade. Of course, there's always the potential that your shares will be called away. So if you have a love affair with your investments and you're never ready to sell them, then certainly trading options or covered call options on your shares is probably not to your liking. Having said that, another of my readers asked a question about how I could know the probability that my shares might be called away. And thankfully, Fidelity's Trader Plus does provide um, some guidance related to that. Of course, these are all uh, probabilities, they are not certainties. And so when you're trading options, you need to recognize that the future is unknown. And that's true of everything about life, with a few notable exceptions if you read my blog. So I just want to show you how I use the tool. I'm looking at my wife's IRA account, and she owns 600 shares of Ford. Right now, there are no options contracts on those shares. And although I'm not going to make a great deal of money by trading an option contract, I believe that it is a profitable opportunity, and it's a way to illustrate how I do this. So what we have on the screen are a couple of things. First of all, I'm looking at a screen called the option chain. And the option chain provides some information about the potential options for Ford. I'm only looking at the calls, and I specifically said that I wanted to look at only the options contracts for August 14th. I could certainly turn on other dates, and the potential profit is going to vary based on the date. The further out the options contract is, the higher the probability that my shares will be called away, and also that people will be willing to pay more for my contract. On this particular screen, in addition to choosing calls, I'm saying I want to see 20 strikes, and that's just the number of potential prices. There aren't 20 of them shown here, but it expands the number of potential prices. The people who are interested in this contract indicate by the bid price that they're willing to pay for the contract. So right now, Ford shares are trading at just under $14.50. And so I would want to receive at least $15.50 or a dollar more than the current share price. Uh, there is some risk that the shares would be called away because this contract would be open until August 14th. Another key feature that needs to be turned on when you're trading options, when you have the option chain window open, you should click on the box that says multi-select. And when you do that, you will see additional information down here on the screen. So I'm going to turn that back on, and that reveals some information about the contract that you're looking at. So in this case, uh, what I'm looking at is potentially selling a contract for 9 cents per share, and that would result in a 9-cent per share credit. The break-even point is $15.59, and the reason it's a break-even is if you take the $15.50 and add the 9 cents, if the share price does go above $15.50, I already made 9 cents on the share. So my maximum profit for 100 shares, one contract, so one contract is highlighted, is $9. It says the loss, the maximum loss is unlimited. However, that's a bit misleading. That means that, yes, indeed, the shares could rise to $20 a share. And if you have regrets, then you're going to feel like you had a huge loss. But I'm understanding this trade to be, I'm willing to sell my shares for $15.50, given the current price of the shares, and I want somebody to pay me for the privilege of potentially buying my shares. So I think unlimited loss is probably a bit of an overstatement, or it's a caution, but it's not normally any kind of reality. This number right here is the one that's most significant. I usually don't want to enter into an options trade where the probability of profit is less than 70%. So what this number is telling me is that there is a 22% chance that the share price of the forward shares is going to rise to $15.50 by August 14th. That seems like a reasonable risk to me. Now, you might say, well, $9 isn't much profit, and that's true, but most of the trades that I do are for significantly more profit. So turn on multi-select. That reveals some additional information. You can see the bid, the midpoint, and the ask, and there's some volume on this. So I'm going to click the trade button, and that's going to bring up a window that allows me to specify the price that I want for my shares. Given the fact that somebody else is asking 10 cents and somebody is willing to pay 9 cents, I'm going to stay with the 9 cents. And this particular contract is only going to be in force for today. So if it doesn't fill today, then that contract will expire. So I'm going to preview the order. And after the Fidelity commission of 45 cents, I would make $8.55. So I'm going to place this order. The order has been placed, and I can see that if I look at the order screen, hopefully, there should be an indication that this contract was filled. And indeed, it was filled at 9 cents. So this is the normal process that I use when I'm creating covered call contracts. If you own 100 shares of an investment and options are traded on that investment, you can make additional money by trading options contracts. As always, I welcome your comments and questions, so don't hesitate to reach out if you have some.